Before we get started, we just want to thank Old Republic Surety for sponsoring this episode of Let's Get Surety, as well as NASBP virtual seminars. For more information on Old Republic Surety, visit www.orsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. I've got with me today my co-host, Mark McCallum, CEO of NASBP. Hey Mark, thanks for being on.
Absolutely. Hi, Kat. Thanks for inviting me back.
I know this is a topic that's exciting to both of us. We're going to be talking today about technology and AI and the future of surety.
Great topic. Such a timely topic. Seems to be on everybody's lips these days.
So true. So to talk about that with us today, we've got Kristen Sharpe, CPA, partner at Crowe LLP. Hey, Kristen, thanks for being on.
Hey, Kat. Hey, Mark. Thank you for having me.
We're glad to have you. Well, before we dive into this crazy topic, can you just tell us a little bit about yourself, Kristen, and how you found yourself in the world of surety?
Yeah, absolutely. I grew up through Crowe as a public accounting auditor, did construction auditing, found myself drawn to technology early on. So I came over to a technology consulting group at Crowe. Consulting and technology actually at Crowe is, one of the largest revenue producers for us, even though, we're historically known as a public accounting firm. So we've spent the past 10 years really in my group now looking at surety and the way that we can bring innovation, document automation, anything to do with technology products and services to the surety underwriting folks. And so through that, we've really grown up and come about with the age of AI as well.
Well, certainly, surety seems like an industry that is ripe to adopt technology. I'm sure you're seeing a lot more demand for your services, and in particular, probably automation, digitization. Could you tell us a little bit more about what you're seeing currently in terms of questions you're getting from the surety industry?
Yeah, absolutely. I mean, surety is really ripe for automation, and insurance in general seems to almost lag behind banking and financial institutions by about 5 years. Banking's so highly regulated. And what we're seeing in insurance, and then specifically surety, is some of the what you would call more mundane automation use cases. It's that lower hanging fruit of let's automate and really get lift out of those repeatable tasks. So it can be things like, risk assessment and underwriting, automating the intake of documents, just document collection alone, extraction of financial statements, of job schedules, putting data into analytic systems. And then the other thing with surety too is creating the new value out of that, with this exposure of data linkage around the industry, creating things like predictive analytics, creating, pure data analytics, things that this industry historically has sort of been lacking or hasn't had a widespread opportunity to have advantage of.
Right. I mean, that certainly makes sense. I imagine post-COVID, I think that really emphasized the need for the industry to move in a more digital future. And I'm sure the questions, the demand that you're receiving for your services has heightened, I would imagine, in that regard. It seems like everybody has various systems, however, including some of their own, and then also vendors out there. How do you help them evaluate what is going to be the kind of best technology for them?
Yeah, that certainly is one of the largest obstacles, is that any single surety organization is using, 4, 5, 6 different systems. So for vendors such as Crowe, the way that we can best advise any prospective clients is to look at what works best for them. And there is not ever going to be a one size fits all for the surety industry. But the systems that are becoming more prevalent and the most valuable are those that really look at systems integration as one of the main stays of what they do. So, for example, there are bond origination systems out there, underwriting platforms out there, such as what Crowe offers. And what we need to do to sort of survive and to help these companies is link into their existing billings and claims and mainframe systems, because underwriters' workflow and experience and bond producers' workflow and experience, whichever party it is, they need to feel like they're having this seamless experience. They have all of these distinct jobs to be done. When you have to log in and log out of different systems, and that just makes their workday inefficient. So anyone who's going to be successful with whatever else they bring to the table, as a vendor especially, they need to make that systems integrations really high priority on their list.
Right. And you mentioned what you're seeing a lot of is kind of the mundane or more manual tasks that they're trying to automate, find the efficiency and so forth. Tell us a little bit about, as these organizations are moving in this direction, do you see some of their employees resistant to adopting technology, or are they excited about the efficiencies that it will bring to their position or their department?
I think it's changed even in the past 5 years. So, we look at this time period of pre-COVID, post-COVID, really. Yeah. And post-pandemic, it seems that was the prove it out period, that we can work remotely. We can work on, not on paper, not on desktop applications, but more in the cloud, right? And certainly there's a new risk that's introduced when you have cloud solutions and when you're using AI, and there's cybersecurity that has to be considered. But putting aside security and those risks, the general appetite is that we now see there are a lot of efficiencies to be gained. And I do think in general, there's less resistance and more excitement, both because of what we went through in the pandemic, having to work remotely, and also because of the changing demographic, right? And we talk about that a lot in Surety, how, there's a certain group that's aging out, younger folks who are coming in. I mean, you think about the young professionals, right, who are coming up through college now or going through college with generative AI at their fingertips. That's not an experience any of us have had. So they are absolutely going to enter this industry and be excited about using tools, scalable tools, whether it's built internally or being provided from a vendor that helps assist their job, make their job easier. They're not going to be satisfied with hand keying financial statements anymore.
Right. And I think that's a really interesting point. So the expectation for the industry to remain competitive versus other industries is that technology adoption is almost a necessity, because your future workforce is expecting these kinds of tools to perform their tasks and to succeed in their industry. So that's really really interesting. So we talked a little bit about the technology adoption of the Surety company itself and getting better internally, being more efficient. What kind of impact does what I call the stakeholder ecosystem have overall on their adoption, such as the agents that they are working with, the principals that they're working with, and even the owners or the obligees that they're working with? Does that impact their choice of technology or the rate of adoption for technology?
It is a really good consideration that needs to be considered. You can't just look internally at the, talent acquisition that's needed, but also, how you function in this network with all of the other parties in Surety. And, I think it is sort of in this landscape now where if you're not adopting new technologies, you are going to be left behind. And as that expectation moves forward sort of equitably across, whether it's bond producers, underwriters, if it's, the principals, the owners, it all is sort of working in tandem, because there is this explosion of data from connected devices, and in construction itself, there are physical robotics, and the data management and data analytics that they have to deal with. So in turn, insurance sort of lags behind construction even in that way. It makes sense that technologies are going to be pushed and they're going to be accepted more readily. When a surety underwriter says, I need, this document in a digital format, it's no longer really scoffed at. There are people who are out in the field taking pictures, of data points and taking pictures of WIP schedules, and they'll send them into, a vendor system and say, I need you to extract this data. And that was laughable 5 years ago. But it's the way that our consumer attitude has changed. And I think as such, there is this general expectation. Now, this sort of change, it's always hard when, you have this delicate balance of power really between principals,
Right.
your obligees and your underwriters. And that's a difficult power balance to maintain. Everyone needs something from someone else. Everyone wants to work together. They don't want them to leave and work with somebody else. So I don't want to ask you, as my principal to do anything differently, anything that would be difficult for you. So, what I see a lot of are surety underwriters, themselves either looking to build or looking to buy some creative solution that helps make their jobs more efficient without asking, principals to do anything differently. That's a really, really hard line to walk. And I think that has been part of the slowness in technology adoption, is not asking anyone to do anything differently and not being regulated to do anything differently. I do think that it will be generally accepted, but I think that everyone still has an eye on the parties they work with to make sure that there is acceptance across the network. And, with the lack of regulation, it could take one regulation that comes out and says all of a sudden, you know what, you have to produce, from your contractor system, you have to produce digital XBRL files. And then our conversations will all change, right? Everything we do will be different. But until that time comes, what you really see are forward-thinking, technology-enabled companies, across the network who are really driving forward and saying, look, I took a big swing and I'm doing this differently, and I've connected my system directly to my underwriter system. And now I can click a button and I can send them data, and it works well for us. And then others will begin to adopt that.
When you mentioned regulation and how surety and insurance tend to lag behind the finance and banking industries, which are much more highly regulated, do you think regulation has caused it to go more slowly in surety, or do you think some regulations are going to change and cause it to move more quickly in the future?
There are pockets of both. So, regulation has caused it to move more slowly where, you're required jurisdiction by jurisdiction to have a wet signature, right, on things. That certainly prohibits a lot of technology. The technology is there and it's available to be used. But if it's, if there's a regulation in place that disallows it, then you can't move forward and you can't move around it until that regulation changes. And I don't see a lot of insurance regulations that are in support of technology. It's more that they either are restricting technology or there's just a lack of regulation around it. And I think we will start to see more regulations come out as especially generative AI becomes more prevalently used. Companies right now are, even on their own, starting to embrace the use of ChatGPT technologies. And we have yet to see what the impact of things like that have. Once companies figure out how to make that scalable, and vendors, we're dealing with the same thing at Crowe. Once we figure out how to make this scalable and commercially available, what is the impact? Are we creating, deep analytics that will start to predict for underwriters if they should underwrite certain companies or not? And what does that mean? And, at what government jurisdiction do they take note of that and start to come out with, some guidance and some best practice sort of things for the companies?
So you were talking about regulation, and I imagine you're talking kind of like domestically in the U.S. Do you see, surety now is kind of on a global stage. Do you see any difference between where we are domestically in terms of technology adoption in the surety industry and what you're seeing internationally?
Yeah, there is a little bit of difference, so internationally, our closest, comparison to U.S. surety is certainly Canada. And Canada has looser regulations around things like wet signatures, on bonds, and have done a lot of digital adoption to integrate systems and be able to share data more freely. Private company financial data is shared in a way that, it's anonymized and it's then aggregated, and it can be available, on a peer basis. When you go more globally, there are certain companies who have, large surety underwriting presence in the U.S., but also have global counterparts.
Right.
And you're really looking more at, what we in the U.S. call commercial surety at that point. And as such, the focus is less on this thing we call the WIP schedule. It's much more focused on financial analysis,
Right.
In the contract management. And there are a lot of technology solutions available that help extract the data, that sort of data mine those different documents. As far as I have seen in my experience with these companies, they're really making their own right now and haven't run into any, either regulation support or hindrance to what they're doing. But what they're looking at now in the conversations we've been involved in is how do we include, U.S. surety into that fold? And in some cases, U.S. surety is the largest branch of surety for these insurance organizations.
Right.
So, what we're seeing a lot of are tools that are being used, even from insurance organizations' legal teams, something like a contract reader embedded with AI. And surety is starting to get the benefit of some of these technologies that have been trickled down through the larger organizations. And I think as these companies start to be allowed to use this and they see that there's benefit and the risks can be mitigated and managed, then the smaller companies who are only US based will start to get the benefit of that too. It'll become more widely acceptable to use AI embedded contract readers as an example. So I think that is one way, that global surety actually will be leading US surety into that world of technology.
Interesting. You had touched on earlier about competition for a younger workforce, competition among sureties to be more efficient in their delivery. Along those lines, do you think that technology adoption or just technology in general will mean that the surety industry will be dealing with non-traditional competition, meaning insurtech coming in and trying to perform surety like a traditional surety? If you're looking into the future, how do you see that play out?
Yeah, I think I thought for a while that the party at risk for this sort of technology competition are really going to be the bond producers. It's going to be our agents because, they truly are an agent between two other parties. And so when you have companies out there, and I don't want to name any companies, but there are certainly companies out there who are doing, online bonding, and they're doing it fast, and they're increasing, those single bond limits that they're able to do. Then it sort of turns back to, our traditional bond producers to look at them and say, well, as a surety underwriter or as a principal, like, what is the value you can bring me that I can't just go online and get in 5 minutes? So I think that'll be an interesting, area for us to watch to see what tools can we, provide our traditional agents at these agencies that will keep them relevant and keep them, providing new value in this area where the value that they've traditionally provided is now sort of being automated.
Interesting. And you always hear the term that surety is a relationship business, right? But I guess different forms of surety or different bonds maybe more transactional than relationship driven. So do you see greater technology adoption in kind of the transactional realm of surety versus, let's say, contract surety?
Yeah, certainly. I think that's, to the point of the last comment, it is definitely the transactional, surety that we're seeing be automated more.
Okay.
And that's where I think the bond producers can insert themselves into that and see what value can I derive from all of these transactional bonds. We've discussed with different agents their ability to tap into those data lakes so that they can provide, pure data books back to the principals so that they can, help with analysis, even after the fact. So yes, I was approved for this bond and that has moved forward, but what is that new value that can be provided to me other than just receiving the bond?
Right.
And that's where I think it's really more of an opportunity for the bond producers to be able to grow their responsibilities really into something new, into driving this new value. For the, traditional contract surety underwriting and that more relationship-based assessment, the bond producers will continue to play a role there. And it's just a matter of them embracing the technology and being part of that data network, integrating themselves into that so that, the stop along the way is they're able to look at all of the data, assess quickly, and then turn it around, provide it to the underwriter in a way the underwriting company can consume that and make their decisions quickly. Those decisions, have to be made by a person because
Right.
then they take into account things like, history of our relationship working with this company. Things that you can't really put down on paper and expect a machine to spit out an answer for you. And I think that that's an important aspect of all of the AI talk going on is that AI will assist humans in making decisions, but I don't foresee it getting to a place where AI will make the decisions for anybody.
Well, and you hear stories of AI and AI hallucinations. So that could be another reason why you need a human involved in the process as well.
Yeah. And actually, Kat, that's the AI hallucinations as well as the biases that inadvertently get put into AI are, I think, one of the biggest risks when you see all of these insurtechs who are popping up and, making claims that, we have AI, we have generative AI, we can allow you to chat with a bot and it will spit out an answer. And it's hard now because you can't look at lines of code, even as a technologist. I can't look at lines of code and see, oh, that's how you derived the answer. It's all a little bit of a black box. And as such, it's going to take a lot of responsibility from the vendors who are claiming that they have these things to put them out there in a way that protects the data, that protects, the decision and protects the output. Because really that output, the advice that's being given or the suggestion that's being made, the insights that are derived, those are going to affect somebody's business. And that is a very, very important thing that can't be lost in translation here. And if we don't know all of the reasons that AI has made that suggestion, then, I don't think it's responsible to move forward with it. So, the model that I think needs to be put in place, that will be put in place, is there will be use of AI. It will make decisions, but we need to continue to put the people in the middle of that decision and that final, piece of paper that it's drafted, because it's so important that, we keep that human in the loop and that relationship first and foremost in this industry. It's just, we're not looking to put anyone out of business, right? But because we didn't responsibly roll out AI. And I think that's a consideration that every IT department and every company needs to make when they're looking at an external vendor or they're looking at building it themselves, because the tools are available to make these things yourself and to do it very easily. And that's one of the things is they're opening up, the ability to build AI and build your own technology solutions to people who aren't, programmers, people who were historically trained to be these data engineers. And that makes it easy and quick to do, but you have to also consider and understand, your responsibility in doing that. So that's something like at Crowe we're very, very focused on. And, to my chagrin, sometimes it's what causes us to go a little bit slower, but it's because you have to push these things forward with cybersecurity in mind, with, hallucination and bias in mind, and make sure you're eliminating, mitigating as many risks as possible.
I mean, that's really interesting. So you've talked a lot about data and leveraging the data and then making sure that the model is correct. Could you talk a little bit more about the quality of the data and how does somebody who's participating or using the technology get some assurance that quality data and evaluation of that data has occurred?
So there are a lot of methodologies to, eliminating hallucination and bias and, false positives and different things like that in AI data. There are people who are trained to do that. And it's important to just know that there is a process in place with it, that it is being done, that it's not being ignored, because as soon as it's not thought of or it's ignored, that's when it could start to kind of come off the rails. And, the AI algorithms, they analyze vast amounts of data. And what they're doing is they're assessing risk and then learning from that assessment,
Right.
and then assessing the next risk. And when you get into the realm of decision-making or predictive analytics, anything where it's net new and you're looking at generating something and not just an extraction or an output. That's where that sort of risk comes in. So I would say, to anyone who's building the technology or assessing buying a technology, just be diligent in asking those questions. And you maybe don't have to understand how it's done, but you need to understand that somebody is looking at that and that there is some process and policy in place with the company or the people responsible for it.
Yeah, that's great and very important.
Yeah.
So if we had to ask you to predict what the industry will look like in 5 years and its technology adoption, Kristen, what would you say?
This is one of my favorite questions because I love thinking about where is Surety going to be in 5 years and where could it be, and then reeling that back to where I think it will actually be. But I think that there will be, a few key tenets in the next 5 years. We already have this explosion of data from connected devices. We have open source and like data ecosystems, and we have advances in these cognitive technologies, these LLMs and ChatGPT type of things. Because all of that exists, it is really just a matter of the industry figuring out how do we productize that and how do we scale that responsibly. Once we can do those two things, I think what the industry is going to look like is there will be vendors still in the industry. There will be, very robust IT departments within companies of all sizes. And there will be a combination of, building our own system as a company and going out and using vendor systems. But all of the systems that will be used will be interconnected. And they'll have to be, because the data needs to travel quickly and decisions will need to be made immediately. No longer in days, it's going to be in hours, it's going to be in minutes, in a lot of cases. And so that interconnectivity between systems is going to be one of those key tenets. The other thing that will be done is there will be AI assistance in decision making, and it will be different for every company. Especially every underwriting company, they're going to weight different things. with different importance. They're going to want to look more at the contract, more at the WIP schedule, whatever it is that they need to get to their decision. And that's their company's, sort of proprietary process. And so their decision-making system will have some sort of automation in it. I do think still there will be, the need for more talent in the industry. We're going to continue to see a demand for more people to be able to do that work and make those decisions and ultimately take it over the finish line. So I see, another key tenet being that AI-enabled assistance. But also, the third key tenet is more people who are just working differently than our underwriters of the past.
That's a pretty exciting look at the future there, Kristen. It's been a lot of fun having you on, talking about how technology can transform the surety industry. Hopefully we'll get you back on another episode sometime soon.
Yeah, thank you guys so much for having me.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just want to say thank you again to Old Republic Surety for their generous support in sponsoring this episode of Let's Get Surety. For more information on Old Republic Surety, visit www.orsurety.com.